Since it's still new, I'm still getting, my brain is still processing it. It's a new, it's something foreign. It's not natural. So it's still processing it. Ang tinuro lang sa akin ni Vic, kapag medyo gusto kong lumiwanag, I just blink para blink lang. Blink until it gets clearer.
You know, I didn't get the beginning. Was it an operation, Tito?
Yes, it's Vic Caparas, a member of ours, removed my lenses and changed it with new ones.
That's nice.
Yes.
Good.
You have maintenance eye drops, Tito?
Yes, I do. 3 times a day. 2 of them. One for dryness. Siyempre, it's not natural pa rin, ano? And the other one is to, I don't know, basta sabi ni Doc, lagay ko, di ako maglalagay, masunurin ako.
Sabihin na lang, ano?
I'll follow instructions.
We are obedient, no?
Yes.
So you can hit the golf ball better now, Tito.
Pardon?
You can hit the golf ball better now with your new pair of eyes.
Hopefully.
Mapapa na yung ano mo.
Looking forward to it.
Ano yung handicap mo?
I haven't played for a long time, so we'll see. Bawal pa mag-golf eh.
Oo nga.
Bawal pa.
Bawal pa ba? I'm gonna tell my sons.
Yeah, that walk around to exercise, may limitation kami sa Dasmariñas. It's only between 6 and 9 in the morning.
6 and 9.
They're so strict.
They were questioning that. But it is true because after 9, there are more people. Diba?
I know. But what I'm going to tell them, okay, go to the palengke. They are
5 o'clock. 5 o'clock.
Kami ang tayong sa Tiga Village ang ini-strictuhan. And then the police are inside. Nahuli kaming dalawa ni Vicky. Pinauwi kami.
Okay, good afternoon, fellow Rotarians, our lovely aunts, and guests. It's now 2:04, so we're going to start our meeting shortly. But before that, we just have some announcements. Okay, house rules, number 1. Please be advised that microphones of non-program participants will be muted to help keep the background noise to a minimum. May we request the visiting Rotarians and guests to please type in the comment box your name, your club affiliation, or the Rotarian who invited you to participate in this meeting so we can properly acknowledge you later in the program. For our open forum after the talk of the speaker, in case you want to ask a question, please use the raise hand button or simply notify us by typing in the comment box. Alternatively, you may want to type in your question and we will try to accommodate it during the question and answer session. Lastly, please don't leave yet after the response of our president, as we will have our group photo with our speaker. So now may I ask our President Louis Aseoche, to call this meeting to order.
I call this meeting to order.
We shall now have our invocation by Rotarian Porsche Peña.
Let us pray. God our Father, we come to you in our need during this time of pandemic, where people are afraid and feeling of anxiety about this new normal. Great of the massive that threaten our world today, and grant us the gift from the Holy Spirit to activate the forces of goodness, of justice, of love and peace. Where there are people that needs to be protected from COVID-19, let our Rotary commitment continue to serve mankind. Where there is abundance, let there be simple lifestyle and sharing. Where there is poverty, let there be dignified living and constant striving for just structure. Where there is selfish ambition, let there be humble service. Where there is injustice, let there be atonement. Where there is despair, let there be hope in the good news. Where there are wounds of division, let there be unity and wholeness. Help us to be committed to the building of your kingdom, not seeking to be cared, but to care. Not expecting to be served, but to place ourselves in the service of others. Not aspiring to be materially secure, but to place our security in your love. Guide us in your Holy Spirit, for it is only in loving imitation of you, Lord, that we can discover the healing spring of life that will bring our new birth to our earth and hope for the world. We pray for the family of the victims of COVID-19 to find comfort from your care and bring back their faith in you, their dignity and security. Lastly, we pray for your mercy and help our businesses to regain our losses and give strength and hope that faith is only our hope and believe that all things will pass and nothing is permanent in this world, even COVID-19. To our President Louis, may you give him strength and free from COVID-19 so he can do service above self. All this we ask in the name of your Son, Jesus. Amen.
Thank you, Rotarian Porsche. Now we shall have the Philippine National Anthem followed by the Makati Rotary Club of Makati hymn.
Hello. Yes. Did you try to communicate?
We're the Rotary Club of Makati, and together we stand proud. We are leaders with integrity, always ready to serve humanity, always living by the four-way test, building goodwill and peace along the way, giving hope to the world. We're the Rotary Club of Makati, prepared to aid our fellow men, as true Rotarians we live to lead. We believe in service above self, and this is why we succeed. We're the Rotary Club of Makati, and together we stand proud. We are leaders with integrity, always ready to serve humanity, always living by the
Now for the four-way test of the things we think, say, or do. Is it the truth?
Is it the truth?
Is it fair to all concerned?
Is it fair to all?
Is it fair to all concerned?
Will it build goodwill and better friendships?
Will it build goodwill?
With better
Will
friendship,
it be beneficial to all concerned?
Will it be
will it be beneficial to all concerned?
Now we shall have the greetings to birthday celebrants and those who are celebrating their wedding anniversaries. For those who are celebrating their birthdays, we have Rotary Ann Maika Tambunting on August 24. That's today. And for wedding anniversary, we have PDG Sid and Tesha Garcia on August 27. So happy birthday and happy wedding anniversary. Now for the introduction of visiting Rotarians and guests. For our visiting Rotarians, we have first Aunt Tess Asioche. And we have Nelly Bengzon and Tisa Fernandez. And for our guests, we have two incoming members, Attorney Andre De Jesus and Cesar Campos Jr. Welcome to this meeting of the Rotary Club of Makati.
It's our pleasure being here, sir. Thank you.
So now we shall have the President's time. So may I call on President Louis Aseoche.
Thank you, Past President Junjun and Invocator Porsche Peña. Thank you for the prayers, but we also need to pray for our members, Manny Padiernos, Derek Tan, for their speedy recovery, as well as for PP Sani Tambunting. We just received good news about Rose and I Galvez, and they're on their way to recovery. Prayers answered. Allow me now to share with you what transpired last week and update you on what's in store for our club this week. As we race against time with the urgent need for isolation facilities due to the rising cases of COVID-19 driven by emerging variants, the club turned over last August 19 to the Hospital ng Muntinlupa, the rehabilitated emergency quarantine facility that can accommodate 10 patients recovering from COVID. This is the second quarantine facility that we have already turned over. The first in San Juan, and you have seen that in the RCM video news that we have shown in our last meeting. We have two more scheduled EQFs that will be turned over, one in Parañaque and the other one in the Philippine Army Headquarters in Taguig. I would like to thank Secretary Eddie Galvez for ably steering this project. Thank you as well to Comrade Boy Arteche for joining me at this turnover in Muntinlupa. Then, last Friday, the 20th of August, on the last day of the ECQ setting, the Community Pantry on Wheels went to Barangay Poblacion in Makati to distribute relief goods to over 200 needy families affected by the lockdown. Little did we know that, save for yesterday, the infection rate that day, August 20, was an all-time high of 17,000 plus cases. This Makati Community Pantry on Wheels was done in coordination with Monsi Jerry Santos, the parish priest of St. Peter's and Paul Parish. Allow me now to share with you the video news on this Community Pantry on Wheels in the city of Makati.
On the last day of the ECQ, which coincided with the country posting its highest incidence of COVID-19 infection at more than 17,000 cases, the community pantry on wheels hit the road once more on August 20, this time to provide relief to indigent families in Makati. Each site has its own peculiarities, and in Makati, the team was not allowed to have people lining up the streets. So boarding their own vehicles to ferry the goods and the volunteers, the lead clubs LCP Louis Asioche of RC Makati, LCP Rachel Harrison of RC Makati Business District, and LCP Gigi Uywong of RC Makati Dasmariñas, along with 5 other Rotary clubs in District 3830, RAED Mache and past President David Ackerman and Keith Harrison brought the CP on Wheels to Poblacion in Makati. With restriction protocol on mass gatherings still in place and strictly implemented in Makati, the CP on Wheels team made sure that it has secured the necessary permits for this project. To make sure there will be no issue on proper social distancing protocols, the team distributed the goods house, per street, with the beneficiaries just bringing out a chair in front of their house together with the relief goods tubs.
In this Makati site, we are disallowed from giving away food packs to the residents by asking them to line up the streets. We are only allowed to bring the food packs and bring them to the tables in front of their houses. That way we will be compliant with IATF guidelines and protocols.
A total of 200 families were given 3 kilos of rice, set of vegetables, and a bag of canned goods in coordination with Monsignor Jerry Santos of Saints Peter and Paul Parish. We would like to thank LCPs Aiza, Rage, Let, Nomi, and Adela of the Rotary Clubs of Makati, San Antonio, San Lorenzo, Southwest, Bonifacio, and Greenbelt, respectively, for joining us today, as well as Governor Jo Jitan for her support, our volunteers, and several other clubs in the district which co-hosted the CP on Wheels project. As of today, the CP on Wheels project has benefited over 1,000 families in 5 barangays. As the COVID-19 pandemic continues to rage on, the Rotary Club of Makati will continue to contribute its resources in order to bring relief to the needy communities.
So I would like to reiterate my thanks to our very supportive couples, past President David and CP Mache Ackerman and Keith, and life-changing President Rachel Harrison for always being there present in this CP on Wheels project. The project will have its final stop this coming Saturday to bring relief to over 500 beneficiaries in Baseco, Manila. The fund for this particular site was solicited from our sister club, Rotary Club of Singapore, through the efforts of our Rotarian Keith Harrison and LCP Rachel. Thank you, Keith. Now, for district events and activities, last week was a loaded calendar for me and some members in our club. Last Friday, August 20, we attended the Membership Development Seminar where our very own, the inimitable past district governor, Peps Bengzon, served as one of the main speakers. PDG Peps reported on the state of our zone and district membership. I would like to thank Director Philip Soliven, past President Reggie Nolido, and IPP Peter Manzano for attending the seminar. A day after the membership seminar, I also attended the public image seminar in the morning of August 21st, which our Chief of Staff, Ron Totaro, and our graphic artist, Richard Manilag, likewise joined. It was an interesting seminar, especially the portion how to take the appropriate photos, how you frame them, and how you compose them. And just last Sunday, the most awaited District 3830 handover was finally held. It was supposed to have been held at the Marriott Hotel face-to-face last July 26, but it had to be canceled because the NCR was placed on heightened restrictions. The virtual handover was nonetheless a success. and a very organized one at that. I would like to congratulate past President Regino Lido for once again lending his talent as part of the team that sang the doxology, and past District Governor Tony Kila, who was given the distinct honor to do the charging of District Governor Georgie Tan. Thank you to those who spared their Sunday to join me in this event. Past District Governor Tony Kila, past District Governor Sid Garcia, past District Governor Peps Pengzon, past President David, and Charter President Mache Ackerman, past President Regino Lido, Director Mon Jokno, and Anne Yvonne Kwan. By the way, I would like to encourage our members, especially the members of my board, to find time for these informative district seminars and events, as they would give you a holistic perspective of what Rotary service is all about. For example, this coming Friday, August 27 at 5 p.m., we will have the Allies at TRF seminar, which is being organized by the DFRC team, led by our very own past District Governor Sid Garcia as the DRFC chair, and past President Regino Lido as his deputy. Lastly, this following Tuesday, the 31st of August, we will be having Secretary Minardo Guevara of the DOJ as our guest speaker. It will be a joint meeting with the other big clubs in our country, the RC Cebu and RC Davao, which are both our brother clubs. Let us make sure that our club will be well represented during that meeting. Thank you.
Thank you very much, President Louie, for that very comprehensive report on the activities of the club for the past week. And so now at this point, may I now call on Vice President and Director Tony Lopez to introduce our guest speaker.
Can you hear me, PP June?
Yes, yes.
Thank you. Thank
Loud
you.
and clear.
Thank you. Good afternoon, fellow Rotarians and guests. Ms. Cristina Ulang is First Metro Investment Corp's research head with the title of First Vice President. She is a resource person in the First Metro Asset Management Investment Committee and a member of the First Metro's Investment Committee and First Metro Capital Markets Development Committee, all very important positions in one of the largest investment banks in the country. She was formerly with RCBC as head of economics and research. For many of our members who are UP alumni, you will be proud to know that she completed her MBA degree at UP and obtained her degree in economics from the UP School of Economics. Let me read this exact quote about Ms. Ulang. She is at the top of her game as best as research people come. She is thoughtful and insightful with ideas and perspectives that are constructive, useful, and most of all, actionable. Don't be fooled though, while her conclusions are simple and straightforward. They are born and honed over by hours and hours of hard work and grounded on facts and statistics that she tirelessly and passionately monitors, studies, and evaluates diligently and consciously. She is First Metro's valued resource and asset. These words came from none other than Francis Sebastian, her boss, the chairman of First Metro Investment Corporation, and the vice chairman of Metrobank. With this introduction, I am certain Ms. Ulang will give us a very enlightening afternoon on a mid-year briefing on the state of our economy. Fellow Rotarians and guests, it's my pleasure to introduce Ms. Cristina Ulang.
Good afternoon. Good afternoon, everyone. Thank you for the very kind words. Nice introduction. And thanks also to FMIC Chair, Mr. Sebastian. Very kind words and nice feedback. Good afternoon to all the members of the Rotary Club of Makati, the place to be, Makati. It's an honor, really a big honor. The words are not enough for me to be guesting in this event of one of the most prestigious Rotaries in the country, of course, the Wall Street of the Philippines, Makati. And it's been a few days, just weeks after our first Metro annual capital markets briefing. And it seemed that it's been months and so many things have happened. And I think people are very hungry for new perspectives, information, and insights on what's to come, what's happening, what's the real score. So I'm here to present some views on the economy going forward and also on the capital markets. I'd be happy to show my slides. Are you seeing my slide?
Yes, we do.
Okay. So this is
Stop share mo.
She's on mute. She's on mute. You're on mute.
Miss Ulang, you are on mute.
Tapos tanong mo kung tayo mag-share.
yeah, okay. I was just uploading my screen. Okay, is it there already?
No, not yet.
Not yet.
Not yet, not yet. Oh, sige, share screen. For a short while.
Or would you prefer that we be the one to?
Is it there already?
Yeah, okay, it's there now.
Okay, is it there? Okay. For a short while, please bear with me. Okay. Okay, so this is my first slide. Is it clear?
Yes. Yes, it is. Yes, it is.
Okay. Okay. So this is my presentation slides, and I should be starting with where we are now. And of course, we are very concerned. What is our position now, the economy, or where are we in the growth cycle? What's the credit cycle? Are we tightening? Are we loosening up on our policy, monetary policy, fiscal policy? So that's where I'm going to start. And then I have also some directions on the policy front, regulatory, and then challenges, opportunities, what can go wrong, and lastly, the trajectory of the Philippine economy, which is what really interests us. Okay, so just to show you where we are right now, we are facing the biggest challenge at this point in time. And it's not only us, it's the world. It's the menace of Delta variant. And it seems that, and it's very definite that vaccination is indeed the way to freedom. The cases are rising. There's a global resurgence in the virus. And it seems that North America and all the advanced economies, those heavily vaccinated already, are the ones facing a resurgence. It is a bit sad to note that in the ranking of the vaccination race, share of fully vaccinated people, the share of people, the Philippines lag. You'll see on your right, in terms of the ranking, Thailand and Indonesia are both ahead of us. Philippines were at 17%. But of course, our officials in government are saying we're going to achieve herd immunity maybe first quarter of next year. And this month, it is expected that 15 million vaccines are going to be arriving, and our inoculation rate is going to ramp up to like 500,000 per day. If that is maintained, a simple calculation is going to point to a ramp up in vaccination in the fourth quarter. We may not be achieving the 70% inoculation level by the end of the year, but it is almost there by the first quarter of next year, or maybe second quarter of next year. Maybe that would be the most doable and most conservative. So the next slide will show you what kind of challenge we're really dealing in the health front. Of course, this is an economic and at the same time, primarily a health crisis. It's a health crisis, and therefore the solution is in the health front. That's the only way we can reopen the economy. But what is unique about the point in time we're in now in terms of the health crisis is the breakthrough infection. This is the concept of breakthrough infection, in which the countries that have fully inoculated are the ones now facing a resurgence. And that seems to put into question the vaccination rate that they have achieved. Have they not achieved any progress after all the coverage and the ramp up in vaccination have been done? You'll see here that Israel, the leading country in vaccination, is now facing very high cases per 1 million, 800, 700, and then United Kingdom, North America. These are the advanced economies that have really gotten hold of the vaccine early on and done the vaccination very rapidly in the hope that they can reopen the economy and go back to normalization. And in Asia, on your right, you'll see that the Philippines is the third highest in terms of the COVID cases per million. So why is this thing happening? There is a resurgence, and it is all attributed to the Delta variant, which is a more advanced version, a mutation of the Alpha, which was seen last year. And so the situation now in the US especially is the talk about a third vaccine or maybe a booster, which may be available 8 weeks after your first inoculation, after your first dose. And you'll see here that in 78 countries, Britain, India, Russia, it's the Delta variant that's been very dominant. And it's not only the virus of concern. There's the Alpha, Gamma, Lambda. So we are dealing with a fraternity of viruses that keep on mutating. and the reduction in the vaccine efficacy is now in the headlines. You'll see here that if you got a Pfizer, you'll have a reduction in the efficacy 6 months after of less than 10 to 20%. If you've got Moderna, you'll see on your right, there's a computation there. Vaccine efficiency, 94.1%, but over time it wanes, and 10 to 20% is the reduction in the efficacy. So AstraZeneca is there also. Sinovac, unfortunately, 10 to 30% reduction in the efficacy. So lucky were those that got the Pfizer brand. So, but is this really the solution? It seems that the US is already talking about a third vaccine, a third booster shot to further stimulate the immune system. And so, because of the disparities in the vaccination in the advanced countries that have gotten hold of the vaccines early on, China, US, Belgium, Europe, UK, we have seen this disparity in the manufacturing PMI. So this is a measure of how countries have progressed, achieved some gains in terms of their manufacturing, reflecting the dynamics of the global supply chain. The world is there, 55. This is on the expansion mode, coming from the contraction last year, April, very low, -40 for all of the countries, world developed and emerging markets. So there have been some gains, very good implications for the Philippines, global supply chains. That's why no wonder our exports is up 21%, our imports is up 21% for imports, and then 29% for Philippine imports year to date, first half. So it's been an active trade and trade activity for the Philippines, owing to the recovery of the advanced economies. But of course, the major characteristic is that it's a very uneven, it's differentiated, and there is that sense of inequity in terms of the advancement in the economies, because the vaccine varies in terms of the ramp up, the vaccination, and the availability and distribution. And now the question is efficacy. if we are lagging in terms of the vaccination, how much more would we lag in terms of the booster shot, which is now the key concern among the being talked about very much in the conversation in the developed world. So this is now the forecast of the IMF with regard to the global economic trajectory. You'll see here that the world is going to be on a growth path after the contraction last year. Global economy sustaining growth 6% this year, 5% next year. So it's not all doom and gloom for all of us because we're reliant on the external economies. We will benefit definitely. And the US is ahead, 7% predicted growth this year. China 8.1, even higher. And then the Euro area a bit slower, 4.6. But going into 2022, it's sustained growth. That is what is being forecasted. But of course, there is a lot of unpredictability because the major variable that is ever changing is the mutation of the virus. So we can never be sure if these numbers are going to hold up until next year, given the mutation, if we are going to be dealing with Lambda next time after Delta. So what is the situation in the home front? The Philippine economy bouncing back 11% in the second quarter. We're out of recession. That seems to be the conclusion. But many are saying, oh, it's just base effect. It's because there was a very deep contraction in the economy last year. But I'll show you some high frequency indicators that will give hope and for greater gains onwards, and that will show the resiliency of the Philippine economy. Having started with very strong GDP growth early on, our history was continued GDP growth over the years, and that is our capital, our strength going into this pandemic crisis. So the Philippines manufacturing PMI on your right, you'll see recovery on expansion mode, 50.8, 50.4. Anything above 50 is expansion. So we are expanding. It's just that we have this lockdown, stop, go, cycle of stop, go, which seems to be disruptive, and it doesn't enable a build up in the momentum of the economy. But hopefully with the inoculation and the ramp up, we can slowly reopen the economy in a greater way. But there is an emerging strategy in Thailand, which I'm going to discuss later on. And they have a thesis on what is to do because they're heavily dependent on tourism. Okay, next. Our next challenge is this one. While we are growing and we're recovering in terms of the GDP, the unemployment is still on the very high side. And it is even higher than the crisis year of 2008. Our crisis year unemployment, you'll see here, even lower than 7.7, about 6.8 to 7%. And we have come off some tentative gains coming off from negative 17.7% unemployment rate last year, April, at the height of the lockdown. Now we have improved, but in terms of the overall unemployment, we are at 3.7 million people unemployed. Our pre-pandemic unemployment rate was only 2 million. We hit a low of unemployment rate 4.5%. That was an achievement 2019, prior to the pandemic. And we've seen the unemployment shot up really very high. But there's tentative recovery. You'll see on the right graph table, January, February, March, April, May, June. But every time we will have a lockdown, it seems to shoot up. It shot up to 8.7% in April. And now we don't have the July figure. We don't have the August lockdown figure. But it's going to be not good, not very good. Okay, because of the unemployment, of course, poverty and savings is suffering from a high of pre-pandemic 37% percentage of household with savings. We're down to just 1/4 of Philippine households with spending. That 25% now are the ones with spending. With savings. The percentage of household with savings in banks has also gone down 18.5. Coming from 23.4. So there's now talk about inclusiveness, access to finance, and then borrowing, and therefore, of course, ayuda. So aside from the unemployment, aside from the position of the households in terms of their savings, there is this other challenge that we are facing, and this is not very unique to the Philippines. It's actually global. It's sweeping the world. and this is about the global inflationary pressures. You'll see on your left, consumer prices have gone up in almost major commodity producing countries, India, Brazil, Russia, Mexico, and central banks are really positioning to increase the interest rates in order to combat inflation. Russia, Mexico, the same central banks are now tightening monetary conditions just to make sure that inflation doesn't go haywire. And in the US, the talk now is about the Fed taper reducing the bond purchases by the Fed. And why is there global inflation pressure? They're all rooted to the fact that there's been lockdown, supply chain bottlenecks. There is this globalization, deglobalization. Instead of integrated production chains, we are seeing disruption because of the US-China trade dispute, investments, higher tariffs, higher quantitative barriers. There's protectionism, there's the force of geopolitics, all disruptive to the efficiencies that are being unearthed in the global supply chain. That should have been the goal of most economies. The integration is really weakening. Okay. For the peso depreciation, there is a movement now going to 50, 50, 50. Previously from 47, 48, and that's because the trade has been revived. The Philippine economy, trade balance has gone up. Philippine exports, imports also. Oil price pressures, the oil prices globally is up 50%. It has touched a high of $74 per barrel. And then commodity prices, copper prices, nickel ore. China is reportedly, according to Semirara Mining, is reportedly buying all types of coal available, and so the very good shipments from the biggest coal miner, which is Semirara, and good income there for their part. And of course, the infestation, the ASF, decimating our inventory of hogs. There's also economic reopening, pent-up demand, and your pent-up revenge travel, revenge spending, stimulus in advanced economies. And recently, the Biden administration has passed a 1 trillion, 1.9 trillion worth of infrastructure budget. So definitely, it's going to boost aggregate demand. And in that sense, it's going to fuel inflation. And right now, the Fed is talking about how to fine-tune the monetary policy so that they are able to clamp down on inflation. And of course, the Delta variant. This is a mitigant because it's going to be, it has a spurred lockdown, and therefore economic activities are lower. So it's a key mitigant, and therefore interest rates have responded as well. Even oil prices now are coming down, 64 per barrel, $64 per barrel. On your right, you'll see the Fed's new dot plot, and this signals the fact that the consensus in the monetary authorities in the US is that there ought to be a reduction in the stimulation, in the monetary accommodation, so that the inflation doesn't go through the roof. That is the concern now. There's going to be a fine-tuning of the monetary policy, reducing the purchases, the asset purchases made by the central bank. So aside from the inflation, we're now seeing the policy reaction to inflation. Just because the Fed is going to raise interest rates maybe next year, 1.8% is the 10-year target, 10-year prediction for the 10-year US Treasury. That's the level next year, expected. It doesn't mean that the local central bank is going to follow. We are at a historic moment as far as our key policy rate at 2%, and our reserve requirement on banks 12%, very low historically, and this is going to continue. This is our view. This is going to continue because we need to stimulate the economy, and that has been the pronouncement of the Governor Jokno. So what's happening to the capital markets? What's happening to the equities market? You'll see on your left that developed markets are reflecting the robust gains from the reopening. The US, China, Europe have all gained in terms of their manufacturing activity and economic activities. Corporate earnings are good, above consensus in those countries, and therefore the equities market reflect that. In Asia Pacific, we are not so fortunate. Emerging markets, you'll see very low valuation, but the Philippines is still prone to selling, but there is now interest among foreign buying, among foreign investors. So you'll see a divergence here on your right. MSCI equity indices, the Philippines is only up 4% only because this graph started and normalized starting March of this year. But you'll see that the entire emerging markets is down, all pointing downward, while the world MSCI index is there to the 10% gain. So there is now a divergence. Growth is diverging in the US, more advanced, in the advanced economies, higher, diverging from the low growth scenario in the emerging markets. And that's really because of the gains in the health front as well, and the room to do some policy stimulus. So as far as the equities markets concerned and the investors' appetite for risk, the VIX fear gauge is moving lower. It has actually moved lower. That's the bar graph on your left. The blue bars, it has gone down in spite of the virus spreading like wildfire. We're seeing risk appetite among investors there. The fear is not there. Very aggressive investments, and that has put the valuation of the Wall Street very high. There already in the 38 level. This is the PE on a cyclically adjusted basis, and all of that reflects the V-shaped recovery of the US. So very fortunate that the investors there are making money much more, and so they talk about the rich getting richer and the poor getting poorer. So this slide will show you that in terms of the interest rates and how the fixed income market, the debt markets have reacted to policy and to inflation, you don't see a bit of any panic here. This is your Treasury Inflation Index on the left side. It has gone up. April 30, 2021, you'll see the direction coming from December 31. It has gone up only because of the talk about the Fed likely raising interest rates in reaction to very strong economic growth in the US and inflation. But it has come down dramatically since the Fed in June said that whatever interest rate hikes there will be, it's going to be further down the road. It's going to be very slow, and it's not going to be, of course, it's not going to be drastic. And the US yield curve, this is the US Treasury yield curve, you'll see the upward movement also and the adjustment lower. So there is no fear. The market is telling us something that is not consistent with inflation. And that seems to point to the fact that the Fed is really going to continue with accommodative monetary policy, that there is not too much of a reason to really tighten very aggressively because the health crisis is still ongoing. While the jobs data are very strong, indicators are pointing to very strong recovery in the US. The Delta variant is ever present, and this is causing fear, undermining business confidence, undermining consumer expenditure, and going forward, the best thing to do really is for the monetary authorities to continue supporting the liquidity situation and not be aggressive in tightening. They don't want to repeat the Bernanke taper tantrum of 2013 when the monetary authorities made the mistake of preemptive, very early, prematurely hiking the interest rate level in the US, and therefore it killed the budding recovery process. So they don't want to have a repeat of that, and so they are very careful now, and the market is pricing exactly that there's not going to be any drastic increase in the interest rates, which is very good for us. It's a good backdrop for Philippine corporate sectors and the Philippine government wanting to raise funds. And now we are hearing talks about the Philippine government likely raising additional $500 million near term, just so to take advantage of the still low interest rates globally and the fact that we have not yet been downgraded by any of the major credit rating agencies. So this is the time to raise USD funds ahead of the Fed taper, ahead of rising interest rates. So what's happening in the inflation front? It's really nothing compared to the 70s and 80s. Our inflation now at 4% is not as worse as the 60% that we're seeing last oil price shock of the 70s, the war in Israel, and and uh, and the long lines that we've seen in the 70s when there was really no fuel supply. So we're not in that situation. Oil prices have come down. You'll see on the graph in the middle, it's adjusting because of the Delta variant, because of the lockdown and the disruption in economic gains. On your right, you'll see that the demand for gold is also adjusting lower. It's lower now. It has hit a high of 2,000, and gold is known for being an inflation hedge. So there doesn't seem to be any scramble for gold, although it has held up at that level of 1,009. Very good for our local mining companies, Philex, Lepanto, Apex, and they are all benefiting from the commodity price upswing and favorable demand. So locally, what's being reflected by the local debt markets is a somewhat subdued movement, a very narrow range trading for the 10-year and for the entire yield curve. You see that the short end is very much anchored, and the low end, it's not really moving up drastically. And the governor, the good BSP governor, has been assuring the financial markets that the accommodation will continue, support for the government, support for the economy, favorable financial conditions will continue. There is some appetite in the middle of the curve, 5-year to 7-year. That is the one where, that is the area where most of the traders are trading, profiting from the volatile, bumpy movement of the belly of the curve. In the long end, there is also a lot of appetite. Corporates are raising longer term issues in the debt markets, and the excess liquidity in the system is taking advantage of these issues. So there is demand there, keeping the rates stable, very minimal increases, very manageable increases in the 10-year rate. So what's helping the liquidity is also our robust gross international reserves. So this is an added cushion to our excess, to our interest rate, and at the same time to our dollar, to our peso dollar rate, which is now depreciating but very stable. It has actually gotten the lowest volatility ever, below 1 in terms of the standard deviation. And that seems to be very good for business confidence, because there is no panic in the FX front. And actually, corporations are not very much in a hurry to refinance in dollar denomination because of the just because the Fed taper is there, becoming very noisy. There is no mad scramble for conversion refinancing in USD, and so you see the peso moving in a very narrow range. So for consumer sentiment, we're seeing here. On your left, you'll see this was taken year-end 2020. Good prospects, but more recently, first half, you'll see that it's negative. It's in negative territory for the next quarter. For the current quarter, for the next quarter, it's a bit better. For the next 12 months, it's better, but this is prior to the Delta variant outbreak. But you'll see this is very inspiring. For high frequency indicators, you'll see that retail vehicle sales have moved up 51% year-to-date higher versus 92,000 unit sales. And Toyota, of course, leading as always, 80% higher. And this is a very good indication of the consumer confidence and the very good affordable financing available. Of course, energy sales reflecting that the industrial demand has returned to pre-pandemic. You'll see here on your right, industrial 6,781 megawatts, gigawatts, back to the 6,600 gigawatts pre-pandemic. And this is just first half. We don't see yet the effect of the lockdown, but this is inclusive of the lockdown in the second quarter. And yet we have this resiliency in industrial activity. Made so by the fact that the lockdown is not really very strict. The mobility aspect of it has been assured. And then passenger optimism, there's also expectation of revenge travel once the inoculation is completed. or we achieve a sort of a herd immunity, near herd immunity, you'll see the refunds here are diminishing compared to the exchanges, and therefore there are plans really to travel by people who have been so fatigued by the lockdown. Our FDIs moving up, improving despite the uncertainties, and many are gonna say, no, it's not equity placements, it's not reinvestment in equities, it's all investment in debt securities. As it is also good, and it reflects the fact that foreign investors are keen on emerging market debt. You'll see on your right that there's been this flow of positive flow, EM debt net flows, and that's good for our fundraising activities. Our meaning corporate and also government. So you'll see construction growth also, private and public already on the rebound, 49% higher for public and then 19% in the second quarter. You'll see here on your right the revenues and the net income of the top cement companies, Cemex, Holcim, and Eagle, benefiting from the construction rebound. And the plan of the government is to boost infrastructure spending to above 5% of GDP to 5.4%. In terms of nominal amount, that translates to about 1.2 trillion pesos. We have not seen this level of infrastructure spending, and this is meant to stimulate the economy, provide employment, alleviate the unemployment. We've seen 7.7%, and of course, put some money into household savings, put food on the table, and alleviate the sufferings of the people. So the challenges are now in the fiscal sector, because this is really what has been doing the heavy lifting as far as the economic gains that we need to achieve is concerned. You'll see here that the debt of the Philippine government has risen to 11.2. In just 1 year, we closed last year, 2019, we were at 9 trillion. We ended at 11.2 first half of this year. So that's an additional 2.2 trillion in just a matter of 1.5 years. And next year, we are projected to borrow more, achieve 12.8 in total government debt. So that's going to be an increment of like another 2 trillion. And it seems to suggest that our debt to GDP ratio will be on an upward trajectory, and surpassing what is critical for credit rating agencies, which is 60%. We ought to be below 60% if we are going to get a favorable rating from our credit rating agencies. But we are bound to borrow more, because our tax revenues are going to be hit by the slowdown. Government has just reduced the GDP growth target this year to 4%, coming from 6%. That's the worst case scenario, 4%. And if growth is going to be slow, then your tax revenue is going to fall, and the option is really to borrow. And so government will have to do a lot of balancing with respect to our credit rating, managing our debt to GDP ratio, so as not to get an unfavorable rating action from the credit rating agencies. If you're going to look at this graph, this shows you the trajectory of our government revenues, and that's the shaded blue, and the government expenditures rising very aggressively here, and therefore widening. So the gap is our budget deficit. You'll see that is the gap. That is programmed at 2 trillion this year that's programmed at 2 trillion. And first half we are, that's programmed at 2 trillion, but now government is saying it's going to be just 1.4 trillion for this, for 2022. So the first half, the deficit grew 23%. It's at the 700 billion level, coming from slightly below 600 billion, very aggressive expansion. And where is the pressure for the deficit coming from? It's really coming from the health sector. A lot of resources is needed in the health sector. PhilHealth, there is now this controversy about Philippine hospitals disengaging, and about the disputed amount of what PhilHealth owe to the hospitals, about 80 billion. So that is one point of concern with regard to the health sector. Some people are saying the health sector is at the brink of collapse because there's little support in terms of all of this ironing of all this misunderstanding between government and the private sector. And the other source of the deficit would be the 850 billion annual appropriation for the military and uniformed personnel pensions that have been doubled by the current administration. So that's a concern now given the slowdown in the economy. And of course, the latest news would be about the Mandanas ruling allocating more resources, more national tax revenues to the local government. Previously, it's just a percentage of the Bureau of Internal Revenue resources, the collections, but now the IRA is going to be pegged on the entire revenue collection of the government, inclusive of customs, inclusive of treasury, all that treasury gives to the government. So a lot of pressure there on the deficit to rise. And so what seems to be the solution? Maybe more taxes in 2022. Property rezoning, property value rezoning, because the zonal values are outdated. More foreign borrowing maybe, but our debt is intended to be capped. There's a lot of balancing act there in the borrowing, and maybe the implementation of passive income taxation is going to be hastened, although these two packages of train are still in Congress, the property taxation, property revaluation, zonal values, and then your passive income and financial intermediary taxation, which is your what's known as PFITA, affecting the capital markets. So that seems to be the future of the tax burden in the country next year. So just to highlight again the deficit this year, it's growing. First half on your right, 7.9% coming from 6.5%. And the good thing is that government revenue is still growing in the first half and is projected to grow. And what's happening now is that government seems to be very much intent on conserving the spending, because earlier we saw that spending was like 10% year to date in June, but now the numbers have come out for July. The year to date now is just 8% for government spending. So it seems to be decelerating. But the good news is that revenues have grown 4% year to date July. So for the currency depreciation, this is what's happening, and it's a reaction to the Fed rate going up, likely to be going up, similar to 2013. And so the dollar has gathered its strength historically. That has been the behavior of the dollar every time there is talk about the US interest rates rising. So the peso may be seeing more depreciation, but not really very volatile, not very, maybe very slow, because this is just talk, this is just noise coming from the US. And our reopening is still very slow also. Our vaccinations very slow, but when the economy fully reopens next year and the US economy regains its footing and the Fed tapers more aggressively and hikes the key policy rate, it is almost not really sure, but the probability is higher that the peso will be moving higher also, like 51. We will be normalizing to the level where our trade deficit have widened much more and gone back to the trend level. So the support and the cushion for the peso is really this very strong growth of our resilient OFW remittances. You'll see in the first half, 6.4%, $14.9 billion coming into the country. And last year, at the height of the pandemic, it's just flat. We are still in the territory of 30 billion a year, which was achieved 2019 at the height of our strong GDP growth and global recovery as well. So very resilient, this one. And then our BPOs, Mega World will tell you, Robinson Land, all of this, and of course, ARIT of Ayala will tell you that occupancy is resilient. Some have gone out, but they are now returning fourth quarter this year. it is almost sure that some of the pogos will come in. They have reserved and they will be occupying most of some of Mega World's offices. And this is really what's, just to add, this is what's really inspiring most of our property companies to do their own REIT. It's the BPO occupancy also. And as far as the Philippine banking sector is concerned, in terms of the asset quality, the concern about bad debt, it's not as bad as the 1998 crisis. We're just hovering, the top 3 banks are just, the NPL ratios just hovering 2.3, the best. Metro Bank has the best NPL ratio, 2.4%. You'll see BPI 2.6, BDO 2.7. They've all beaten up the industry of 4.7% NPL ratio, and they're doing very well. They have raised so much provisions last year because they have learned the lessons of the Asian financial crisis and the high NPLs during that time, which hit a high of 12%, as you will see in this graph. Although, of course, credit card, auto loans have the NPL ratios there are way above the industry level, the bank-wide level of like 3, 2, and 2. They're all higher, 8%, 12%. So for the Philippine stock markets, given the lockdown, the cycle of lockdown and stop-go condition of the economy, you'll see here that, and also the lagging vaccination of the country, you'll see that the Philippine market is the most unloved, and it creates opportunity for those who are very interested in trading the narrow range of the PSA. We are here, negative, year-to-date negative territory, 6%, 9%, swinging 5% to 6%, 7%, and we're only better than Malaysia this year. But we take note of the strong, there is this emerging foreign buying by the foreigners. You'll see here the encircled, and we are inspired by the evidence of foreign buying. There's interest in the local market. And that's really because corporate earnings have been very resilient. Our tally in the first half is 76% growth. You'll notice San Miguel has recovered loss of 2 billion last year. It's now up to 16 billion. They seem to be normalizing already back to their good income. And Jollibee also has recovered from the loss of negative 12 billion last year. They're now up to 1.1 billion this year. And the conglomerates are benefiting from the good performances of their banking subsidiaries. So the very strong growth of the Philippine conglomerates, which is really a reflection of the strength of the economy. So that is what's good about our Philippine corporates and our Philippine stock market. It's just that there is a lot of negative sentiment with regard to the vaccination, very slow, and of course, the lockdown keeps on repeating. But the foreigners are noticing that we are resilient and taking advantage of the low, the dips, where the PE touches 16 times PE and your PSA dips to a low of 6,002, 6,003. We notice the emergence of foreign buying. And now at the level of 6,005, there's also foreign buying. The amounts may be low, but it is very encouraging to see that they're still here, keen on Asia, keen on countries that are managing their fiscal sector and keeping financial conditions very suitable, and also doing reform measures. So later on, I'll show you what reform measures we are implementing. This is the pipeline of reforms. This is good from the standpoint of our credit rating agencies and investors. The CREATE has made our tax structure very competitive to the region. We are now down to 25% income tax for the corporate sector, coming from 30%, and it's going to drop over the years. And then FIST, we have this measure for the banks to offload their bad debts, the financial institutions in strategic transfer. The utility sector is bound to be open to foreign investors, the telcos, the power companies. And then we are of course, improving investments in the retail trade, where most of the Filipinos are employed. It accounts for about 30% of the employment in the services sector, retail trade. And so the thresholds for investments are being lowered so that foreigners with lower capital contribution can enter the local market. And then the entire investment list is being revised, being reviewed just to make it competitive in the region. And then, of course, as I have said, we have the train package 3 and 4, the one on property and the one on passive income and financial institutions transfer. So hopefully this is going to benefit all of the industries that are on your right that have managed to gain the growth rates. This is from the financial stability first half financial stability report of the central bank. So the good thing for the Philippines is that even with the peso depreciation and the rising debt, is that the foreign currency component of our total debt, which is like 11.2 trillion, only 27% of that is in foreign currency. And this is what makes the debt burden very manageable. And there is no run on the dollars that we are seeing because we are able to manage the foreign debt component of our. This is the lowest in the region. The Indonesia and Malaysia have higher foreign currency debt, and this is gonna work to our advantage in terms of the pricing of our future debt and in terms of our credit rating. So what is our projection with regard to the economy? So you'll see here that in pre-pandemic GDP, our GDP ended at 19.5 trillion. So this is the level of our GDP pre-pandemic. In 2020, we lost about 2 trillion worth of income, and that brought us down to 17.9 end of 2020. Our GDP contracted 10%. So people are saying we need to generate a similar level of income so we're able to get back to pre-pandemic. So this is our scenario. If we grow by 5% this year, then we will be at the 18.8 trillion level of GDP. And then if we grow next year, 2022, by 5%, we would have achieved the 19.7 or even higher than the pre-pandemic GDP. Maybe third quarter, we're already there. But if we grow 4% this year and 4% next year, then we will be achieving the same. We will be back to the pre-pandemic GDP by the end of 2022. So this is our simulation. Not end of 2022 is the point of full recovery from the pandemic, GDP-wise. So what can go wrong? I worry about vaccine-resistant variant emerging. This is the global worry of the scientists. There could be vaccine-resistant variants, recurring lockdowns. And then economy reverting back to contraction. We may have a double dip. Some economists are already saying we have had a double dip. There could be hyperinflation. If there are continued lockdowns and the reopening leads to higher oil prices and the peso depreciates. Interest rates may rise faster than expected. There could be higher global protectionism in trade and investments. The Afghanistan political crisis is maybe taken advantage of by China, and China is building a lot of allies now, maybe finding an ally in Taliban. And so the continued geopolitical tension between the US and China. Greater reshoring, supply chain rebalancing. Some companies may want to just to be very near their suppliers, and so they are not going to relocate their production outside of their vicinity, and that means they could be relocating from Asia back to the US, from Asia back to Europe, or from Asia back to China, and that's very negative for the Southeast Asia manufacturing supply chain. We may have a fiscal blowout. We don't know what's going to happen to our growth targets. Are we going to achieve? What's going to happen to our tax revenues? Are we going to be borrowing more than our thresholds? And the credit rating agencies may downgrade us. So a lot of things can happen. Bank bad debts also can rise sharply. And so in summary, this is the strengths of the Philippine economy and the trajectory going forward. So we're seeing GDP growth, recovery, but that's contingent on very strong inoculation targets. We have to have the inoculation finished end of the year, next year. But the question is, will it really reduce the infection now that we know that Delta variant is raising the bar as far as vaccine efficiency is concerned? So would we be able to reopen the economy? So as I said earlier, in Thailand, the approach now is to just make sure that the healthcare sector is not clogged or it does not exceed its capacity. The infection does not exceed the capacity. So they are no longer looking after the daily infection rate, but the authorities in Thailand are monitoring the severe cases that are likely to clog the hospital and then exceed the capacity. And the vaccination is going to be helpful in that respect. But they are reopening the economy regardless of the infection rate. So they're not looking at the daily infection rate. It may be 17,000, 15,000 daily. The important thing is the number of people who get very severe symptoms and get hospitalized, and that should be managed in relation to the healthcare system. So there may be more hospitals gonna be built up in Thailand just to expand the capacity and be able to reopen the economy. So that seems to be the strategy now, and they are calling it living with the virus strategy, because the thinking is that this virus is not going to disappear. We may be living with it for longer. It can become endemic, but the approach is to make it to defang it, to reduce the severity of the symptoms, so it becomes just another flu. So that seems to be the thinking about it by the authorities in Thailand, and maybe in the scientists of the world would be looking at it that way. So we have both policy leeway, monetary, fiscal. This is going to work in our favor. Foreign currency debt, as I've said, lowest in the region, and then we have our very strong GIR position, foreign reserves, and very good coverage of our import cover and our short-term debt. So this is our forecast on the right side. We may be growing 5%, inflation 4.2%, OFW remittances will continue to grow 4%, 6%, and then exports continuing to thrive on the strength of China, US, Japan, our major trading partners. Imports also rising 24%, and the currency trading within a very narrow range, helped by the fact that our BPO and our OFWs will be there to cushion the demand for dollars. And then interest rates, very manageable hike at the most 4.25% for the 10-year year end. Infra spending to be revived 5.5%. And then our debt to GDP above the 60% target, but is still manageable and can be reduced and not gonna go haywire. Our target PSA by year end is 7.4 to 7.8, and that's on account of the recovery that we foresee and the resiliency of corporate earnings, continuing accommodation by the BSP, foreign interest on the local market, and of course hopefully the containment of the virus, and we're able to reach maybe even near herd immunity by year-end or first quarter of next year. That would be the end of my presentation. Thank you so much for your attention and for the opportunity to share with you our view. Thank you so much.
Oh, thank you very much to our guest speaker for that very enlightening and comprehensive presentation. So now we open the floor to any questions that our attendees might have. I see the hand of June Palafox raised. Yes, June?
Yeah, thank you for sharing. Very good insights. Yesterday we had a town hall meeting with, can you hear me?
Yes, sir.
Yesterday we had a town hall meeting with Secretary Duque and MDA Chairman and Joey Concepcion with the Management Association of the Philippines. I brought to Secretary Duque's attention that we need more than 5,000 hospitals with our 108 million population. And we have less than 2,000 hospitals. Most of them are substandard. And that's why we donated our architectural design services for COVID centers, converting basketball courts and the vaccination centers. And it seems that even as of last year, we already anticipated that our hospitals will be overloaded And I agree with you, one infectious disease expert that we met in international webinar March last year, this COVID-19 could be COVID-19, 20, 21, 22, 23, or the rest of our lives. It's already happening. So that we architects will be challenged now to all building facilities should be look like healthcare facilities. The challenge is to make them more aesthetically pleasing. So these are the challenges. Another one is I've been fully vaccinated, Sinovac, and yet I got infected. I spent 26 days of hospitalization in Makati Med. And the day I left Makati Med, I was released. I was told by the infectious disease expert, team leader of Makati Medical Center, July 26, that I was admitted July 1st. July 26, the admittance of COVID patients in Makati Medical Center had increased 150%. And many of them now are families and households. That's one. Another one that I'd like to share is a survey done by funded by the Asia Foundation and USAID Foundation with professors from UANP. 30% of construction costs goes to ease of doing business. Parenthesis, the elephant in the room, corruption. 30%. And that's it's that people are hesitant to document it. And it was presented to us at PCCI by the Construction Industry Association of the Philippines. And it's not being discussed, it's 30% of cost of construction going to ease of doing business. Yeah. And thank you for allowing me to share. And I don't know whether these were inputted in your crystal bowling, ma'am. Thank you.
Thank you, sir.
June.
Are there any other questions?
June. Right.
Oh, okay, George.
Yes, thank you, Mr. Ulang, for a very insightful report. No? I'm just wondering, since we're having the national election next year, and election will have a lot of funds coming in. I would believe even in the last quarter to the first half of next year. Has those election flow money, campaign money being factored into our growth? Usually, I think it's about maybe it could be a percent or something like that of our GDP.
Sir,
Just curious.
election years have always produced very strong growth, and it's fueling the consumption. That is where it goes. Fueling the consumption of most of the people, the ones doing the voting, and 6%, we saw 6 to 7% growth at best in all of the election years, 2004, 2007, 2010. And every time there's election, we tend to achieve very strong consumption growth and then GDP. So hopefully it will help fuel aggregate demand growth next year, and of course generate more money for households on top of the ayudas.
So in your report, that is not factored in, the campaign fund.
That's why we are predicting GDP growth of 6 to 7% next year. That is our
that's
view.
factored in
Taking
already.
into account, yes, sir. Taking
Okay.
into account
Thank
the
you.
consumption. Okay.
Oh, thank you very much.
We have a question here from our president, President Louis. Would you like to mention it yourself, or would you want me to read it? Okay, so I'll read the question of President Louis. Do you think economic recovery has a direct correlation to the rate of vaccination in the country? If you think there is such a correlation, do you find countries such as the Philippines, who are lagging behind the vaccine race, to find deeper scarring in their economies? That's the first question. Maybe you can answer that first, because there's a follow-up question to that.
Sir, we've seen the negative, the very adverse effect of all the lockdowns, of all the fact that we are late in our vaccination, and our containment strategy is simply to lock down, and that's very negative for economic activities. But had we done the vaccination very early on, then we would have minimized the lockdown. and we could have safely reopened the economy very slowly with minimal disruption, as we've seen with the lockdown. Every time we have this lockdown, April and now, our unemployment shoots up to 8%. So I'm expecting a high unemployment rate again come this August because of the lockdown, and that is our major strategy for containment of the virus, which should not be. It should be vaccination, really, so that people can go out safely and the symptoms are reduced. If they get infected, they stay home, they don't go clog the hospital with severe cases.
The second question, I think, of President Lewis already been answered. It's related to how much of an impact do you think that the national elections will have on your forecast of economic recovery by the second quarter of 2022?
Sir, yeah, historically, we've seen 6% growth in GDP. That's consistent with our forecast also of 6% growth next year. Hopefully, the 5 trillion government budget is passed, and most of that is going to go to the healthcare sector, education, defense, and then economic services. That is going to be our biggest stimulus for the economy, the 5 trillion. We have not seen anything like that in history of the Philippines. It's 5 trillion pesos, and hopefully the government is able to disburse. And that has been the problem always. Just because the budget is there doesn't mean that it's all gonna get disbursed. That has been the problem ever since. So it's an execution risk that hopefully gets addressed.
We have a question from past President Fred Pascual. Fred?
Yeah, I wanted to do a follow-up on the suggestion that we need to build more hospitals. What kind of hospitals do we need, June? And there is a question to June.
All
Deficit is, you say we should have about 5,000 and we only have
5,000.
about 2,000 now.
5%.
Should they be permanent structures or just temporary
meantime-
structures to take care of the requirements of the pandemic? Because I'm concerned that if these become permanent structures, that they might become white elephants and will end up creating a lot of unusable capacity.
May I answer that? Yeah. That's why we recommended converting covered basketball courts into COVID centers.
Okay, that's nice.
So that when there's no more virus, they can go back to the basketball courts. Even the mega vaccination center, we have basketball court sizes, ambulatory walk-ins. And even the drive-through, we could use 10-hectare parking lots, could vaccinate 10 seconds per person. And SM, I spoke to SM.
Yep.
They're offering their 75 SM malls for vaccinations. And the inspiration is the Dubai shopping malls open for vaccination. So you shop and dine while waiting.
Yep.
And like General Santos City, 600,000 population, they only had 20 ICU beds. Only 20 for 600,000 population. We're so substandard. We are beyond the threshold already. Yeah,
Thank you, June. I now have my question to Mr. Ulang.
Just to
Yes,
echo
sir.
what past President Fred asked, no? As of now, June, I think the facilities, quarantine centers, isolation centers that were set up in Rizal Memorial Stadium, in World Trade Center, they are hardly used. Actually, some of them, I think, all the facilities, some of them has been reduced already. The number of beds. I'm just saying, really, we do need more. But the present one are not being fully utilized.
Kaya yung basketball courts, we have 44,000 barangays. Siguro every barangay may basketball court na covered. And people, I related there's and people commented, kasi June, yung dinonate mo, masyadong mura. 150,000 pesos lang. Klaro kitain.
Well, actually, architect, the concern really for us is which agency would be handling this? You know, the track record of PhilHealth is not exactly very good.
Yeah, I told Duque yesterday. He was not aware we donated our architectural services to the president, sent to Department of Health. A director thanked me, but they did nothing.
Yes. Yeah, that's the sad part. Thank you.
Rotary Club of Makati can donate to all the Rotary Club our architectural design. Donation of Rotary Club of Makati. President Louie.
Fred, did you have a follow-up question to your?
This time I'd like to ask Ms. Ulang, in your forecast, you're assuming it's just a return to things that have been there before the pandemic. To what extent have you factored in changes that are being brought about by technology? For example, BPO. You think it will just be returned to what we had in the past? I mean, before the pandemic. How about the impact of the use of artificial intelligence that threaten to replace some of our BPO employees? To what extent is your team monitoring this impact of technology developments on the nature of employment in the country?
Yes, sir. Very valid point. Very valid concern. Sir, our forecast on the GDP returning to the previous is just it is a number. It actually doesn't capture the transformation that's happening in the economy. And there's actually, if you want to call it a revolution, it's happening now. A revolution is happening now because everything is changing. The banks, you'll be surprised, are applying for digital banking license on top of the regular brick and mortar. BPI is closing a lot of branches, about 100 branches. And that is because they are relying more on digital banking. They're going to give selling and a lot of products through their digital channels. And of course, remote working is now the trend. And we don't know what's going to be the future of work. So banking, e-commerce is now here with us, very much used. Delivery, Grab, online entertainment, Netflix, telcos are profiting from online education, online entertainment, online working. There's about a lot of advances in AI, robotics maybe, and then the data analytics happening, data analytics, SM, and JG Summit. All of them are now exploring data analytics and marketing through online channels. So it's a transformational thing. It's not a return to the old economy. Actually, we can no longer return to the old economy. GDP wise, yes, 6%. It's a number. It's just a number. But in terms of the entire business models of the corporate sectors, they are now being overhauled. You'll be surprised. Even the BPO, they are not your regular call centers anymore. They are in the high value chain of the services, graphics, animation for entertainment, and then your accounting, your engineering services. They're now on the higher value segment of the services being offered. That's why there is really a need to retool the skills. Reskilling is the new norm, and government must really do some budgeting for the employees to be retooled, to be reskilled, because we cannot go back to the old economy because this virus, and there's a theory this might be lingering and this may be an endemic thing, and so the transformation digitally is going to be very much accelerated, and it's happening now. We're seeing it. It's very real because the conglomerates are really budgeting. You'll see them discuss about operating expenses. 10% is being devoted to digitization, and a lot of entities doing some disruptive moves to be able to profit from the opportunities now. So it's entire revolution happening, not only in terms of the GDP number.
Back to basics, we will to worry about human capital development.
Yes, sir. It's human capital investment, upskilling, trading up, in keeping with the advances in the developed world. Even our OFWs must shape up in order to have a skills matching abroad.
Thank you.
We have a question from Keith Harrison. Let me read the question. When do you think international tourism and the hotel and airline industry will pick up? And at what stage should we rotate our investment funds into these sectors?
You know, in Singapore, they are already doing their own strategies in order to boost their travel, because they're very much travel related. And we must also reopen for economic reasons, for travel reasons, and a lot of we're losing a lot of things by not reopening the aviation sector. But of course, the risk is there. And so the thing to watch out for is really the ability of the country to contain the virus, and then do some match up with countries that are able also to contain the virus, and then facilitate some sort of a gateway for people to travel easily, simplify the protocols and the infrastructure, the testing, the target surveillance ought to be simplified to make it easy for people to travel. And there's ought to be really country to country dialogue in order for international travel to push through with uniform safety protocol, health testing, and all of those infrastructure, because it's not all about virus containment. It's really about country to country interaction, and then all of the infrastructure being integrated so that people can travel easily, and all process simplified and uniform. Because the problem now is once you travel, you have different quarantine requirements, testing requirements, different countries. So it's a complicated world now for travel, but Singapore is doing its own simplification just to facilitate. So I think this is something that Philippine government should be looking at, so that our tourism sector is able to pick up, reopen. But of course, the virus containment would be key. And it's nice to hear also from Cebu Air that they're not doing anything drastic with respect to their airline assets. They're not shedding much of it. They're not returning any of the orders. They're just reducing their cash burn, cost cutting, because they want to have the flexibility to return to business anytime next year, maybe late next year, maybe early 2024. So it's nice to hear that these people from the aviation industry are holding on to their business. They're not giving up, and they're very hopeful the inoculation will happen, and the country to country dialogue will facilitate easy travel in the future.
Architect, did you raise your hand again?
Yeah, me. Yeah. Just question to Metrobank. Do you have a facility for credit line for negatively impacted with COVID, small scale industries like working class architects?
Sir, I cannot. How I wish I can speak for the bank. I am not privy to their Sir, but my bosses would know. My bosses, Mr. Sebastian.
Small scale industries are heavily impacted. Ang hirap ang collections. Forcepen niya can tell that. Engineering, architecture, ang hirap mangolekta.
Ang hirap mangulit. Receivables management.
Receivables and deceivables. Hindi na nagbabayad.
And deceivable.
Ms. Ulang, regarding travel, I think by next year, chances are many of the big pharmaceuticals are coming out with new medicine. Like Merck is coming out with their medicine, and some are developing nasal spray. So I think there's a good chance probably by mid of 2022, this pandemic would more or less be like endemic, wherein the travel leisure sector would open up, hopefully, because of all of this development. Yeah, all of this development. Yeah, thank you.
Are there any other questions?
Maybe just to, if I may share, we're designing 4 hotels right now outside Metro Manila. In San Juan, La Union, in terminus ng North Expressway, Panglao, Bohol, Coron, and Boracay. So there are also contrarians. If you remember, it's a revolution. We from Ayala were demonstrating. Henry C., Robert Kwok, and Gokong were buying properties along EDSA. But while we were in the people power, these contrarian Taipans were buying properties. So, opportunity.
They were the plug. They were buying.
If you will allow me, I have an observation and also a question, which is a follow-up to what George Barcelon just mentioned about new drugs which are being developed by the pharma companies. Actually, I don't know, Ms. Ulang, if you had actually factored this in your analysis, but there are repurposed drugs right now, although it's not fashionable to talk about them for some reason. But clinicians and other experts will tell you that they are effective. They have tried it. And there is evidence, for example, in India, when they had this surge, and the drug, I'm talking about ivermectin, was included in the treatment protocol of the state of Uttar Pradesh, which is the biggest state in India with a population of, I think, something like 250 million. And they actually drastically reduced the infection and the death rates upon the introduction of this repurposed drug. So did you include that in your analysis? Because, you know, if a cure, for example, it's just like what George was suggesting, becomes available, are we even to be concerned whether people get infected because now there's a cure for the infection, rather than just hoping that you can get a room in the hospital or a bed in the hospital?
So all of this, yeah, these prophylactic drugs are the ones that can prevent, and us taking it ahead of the infection and the onset of the infection. I think this is going to be not very much widely discussed, and but people are now having access to it. Doctors are prescribing. I think that's very positive development for prophylaxis and also for cure. The fact that doctors are prescribing and we have access, Mercury has it and Watson has it, it's now very prevalent. I think it will help. It will help a lot.
Thank you. Are there any other questions? Because we are nearing our time limit. Okay, there being no other questions, thank you very much, Ms. Ulang, for your very comprehensive presentation and for answering the questions of the attendees to this meeting. So may I now turn the floor over to our President, President Louis, for his response.
The mic. Thank you, President Junjun. Well, it is certainly difficult to be in the economic team of the government these days. They almost always are forced to concede to that seemingly default template of a lockdown in order to stem the surge of infection, even if such lockdown will lead to a contraction in the economy. That default code has to change. We saw the peaks and valleys, or what the speaker described as stop, go, in the graphs earlier presented. The curves were seemingly affected by mobility restrictions in our consumer-driven economy. Each time mobility is tightened, the economy necessarily slows down. An interesting factor that our speaker mentioned is the level of vaccination drive of the government that appears to have an effect on economic growth forecasts. With the rise in COVID-19 infections brought by emerging variants, countries lagging behind the vaccine race, such as the Philippines, may find deeper scarring in their economies, but hopefully it won't be that way. If recent news of the long queues in vaccination sites would show, it does appear that many of our citizens, weighed down by lockdown fatigue, have become more receptive to vaccination. In the chat box, IPP Peter said that our peripatetic members are really itching to travel with a vengeance. And yet we have other problems. There may be anticipated contraction in the vaccine supply as rich countries may crowd out other countries or be less generous with their vaccine stash as they go on boosters mode for their citizens. Past President Junjun also mentioned a while ago other repurposed drugs that can perhaps compensate for that possible contraction of vaccine supply. Junjun, it is still a fashionable topic to discuss. We also have the threats of a strike or work stoppage by our medical workers, seemingly irate at not being able to get the benefits promised to them. And we have private hospitals now threatening to delist from PhilHealth because PhilHealth has not paid their claims. When you consider these, and other externalities, both domestic and global, such as the deepening budget deficit, the threat of increased protectionism in trade brought about by the US-China trade Cold War, it would seem that the work of our economic managers has certainly been cut out for them. The speaker, Ms. Cynthia, ended her talk with a forecast that the country will be able to get back to pre-pandemic GDP by the end of next year, provided a conservative 4% growth rate is maintained. We would, of course, want it to happen much, much sooner, but there are strong headwinds, such as these breakthrough variants that provide a sobering picture. But we have shown resilience. Our credit rating, according to Ms. Cynthia, has not been downgraded. Our BPOs and OFWs remittances remain robust. Our peso has not gone south that deep and is not expected to depreciate that much. And our elections, Brother Hoey, are about 9 months away. We will ride out this storm. So thank you, Ms. Cynthia, for your mid-year appraisal of the state of the Philippine economy. Did I get it right? Cynthia or Christine? Sorry. Please accept as tokens of our appreciation our 50th anniversary coffee table book that contains our club's milestones and achievements for the past 50 years. You can read this coffee table book while enjoying this bottle of Tempranillo. We also would like to dedicate to you one reef bud that will be planted in the Sea of Narvacan, Ilocos Sur. This is part of our Save Our Reefs project, which is a major environmental initiative of the club in line with Rotary's 7th area of focus, protecting the environment and regenerating nearshore marine ecosystems. Now, a replica of the steel plate that will be put on that reef bud dedicated to you is encased in this plaque of appreciation that we shall also be sending over to you. So on behalf of the Rotary Club of Makati, our aunts, our District Governor Joji Tan, the other Rotarians for the different Rotary clubs who are with us today, if there are any, and all other guests in attendance, please accept our heartfelt gratitude. I am sure that my club mates would be interested to talk to you after this meeting, in which case you may wish to share your contact details with them. Before we adjourn, can I ask you to stay for our customary photo take? Ron? Please open your cameras. Okay, so I am this meeting is adjourned. Thank you very much for your time.
Thank you. Thanks, Louis.
Thank you, Louis.
Thank you.
Thank you very much.
Thank you. Good afternoon, everyone.
President
Thank you for your time.
Thank you, Louis.